Hello and welcome to Donatien Investment. This analysis is for macroeconomics as of 20th of July 2026. The full report is on donatien.ca. A narrow contested lead at 38%. It rests on the forward oil tax from an intensifying Iran-Hormuz shock, not weak growth, which is firm, with a soft landing at 24% the live counter case. Four scenarios are always in play, and today stagflation leads at 38%, but it is a narrow contested lead with a soft landing right behind at 24%. Here is the honest tension. Current growth is firm, consumer sentiment surged and housing beat. So the stagflation call does not rest on weakness now. It rests on what comes next. An oil tax. June inflation was genuinely soft, but that softness was partly cheap energy, and energy has reversed hard. The Strait of Hormuz is effectively closed, and oil is up about 30% off its July lows. We did not flip to a soft landing because the tape backs higher for longer. The 2-year yield sits above the funds rate, and the dollar is firm. Capital is following the shock. The clearest inflow is into energy, the direct beneficiary of the oil spike, alongside industrials and defensive healthcare. Defense is bid across every horizon, on the rearmament build-out and the live Gulf War. The pressure is on emerging markets, caught in an acute currency squeeze. Emerging market currencies are down as much as 12% in 3 months on a firm dollar and risk-off. Real estate and long bonds stay soft, with the 10-year yield back near 4.5%, and the oil spike a live upside risk to yields. Because the lead is narrow, the sensible stance covers both cases rather than betting hard on one. Near term, respect the tape and the energy shock. Favor energy, defensive sectors like healthcare and the dollar, and go light on long bonds, real estate, and emerging markets. Longer term, hold the structural book. Gold near its record on record central bank buying, copper and silver on their supply deficits, and inflation-protected bonds. If the strait de-escalates and oil rolls over, the whole thing tilts back toward the soft landing. The honest risk to this call cuts both ways. The biggest is that the very thing driving it reverses. A genuine Hormuz de-escalation would bleed the oil premium out and tilt the lead back toward a soft landing. It de-escalated once already in June. On the other side, the market's top is a handful of AI megacaps, so a reversal there is an index-wide drop rather than a neat rotation. That risk is armed, but not yet triggering, because market breadth is actually broadening. And 2 slower fault lines are worth watching. An emerging market currency crisis is building, and private credit funds are gating redemptions as rates stay high. So, our call on macroeconomics, stagflation. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.